Top tips for becoming a successful crypto trader. Bitcoin is the most popular instrument among traders dealing in the cryptocurrency market. Since its first appearance in 2009, it has experienced exponential growth and, whilst its millionaire-making heyday is thought to have passed, it remains the most commonly traded digital asset and holds significant profit potential for savvy investors. However, Bitcoin trading needs to be approached with caution as significant risks are involved. As a decentralized market, it is highly speculative. Unlike currencies traded on the foreign exchange markets, where values are influenced by centralized governments, economic activity and global events, the value of Bitcoin, and all other cryptocurrencies, is largely determined by supply and demand. This volatility, along with the security issues that accompany digital assets, makes risk management the single most important factor in a Bitcoin trading strategy. The Bitcoin trading tips below are not exhaustive and do not constitute professional investment advice. Instead, you should use this video as a starting point for your research before utilizing one of the many available demo accounts to hone your trading skills before opening a live position. 1. Start out small. The first of our Bitcoin trading tips is to proceed with caution and start with a relatively small investment. Although it's an exciting market with a reputation for making the lucky few substantial profits in a short time frame, it is by no means easy to trade Bitcoin, and there's huge risk involved. Cryptocurrencies, in general, are extremely volatile. Avoid the temptation to go in all guns blazing and, instead, opt for small-stake trades that allow you to get a handle on the market with minimal risk. Of course, the best of all Bitcoin tips is to never trade with more than you can afford to lose. 2. Choose a secure wallet. Your Bitcoin wallet is a holding pen for your digital assets, so it's important to choose wisely to ensure security and ease of access. There are multiple options out there, all with their own features and functionality. For beginner traders, it's advisable to trade through a reputable broker, such as Coinbase, and use the wallet they provide. If you're looking to choose your own wallet, though, you'll need to decide which type is right for you. Wallets are described as either hot or cold. Hot wallets are connected to the internet and subsequently open to hackers. Cold wallets store your assets offline and are generally considered more secure. If you want instant access and are only holding a small amount of Bitcoin, a hot wallet should suffice so long as you double-check the reputation of the provider. When holding Bitcoin of high value, it's best to opt for a cold wallet. 3. Research the market. The only surefire way to become a successful Bitcoin trader is to do your homework and get to know the market. This is not a straightforward process, as many of the practices used to evaluate other financial markets do not apply to Bitcoin. It's a largely speculative field, and the effects of global news and events on Bitcoin value are very unpredictable. That said, there are steps you can take to broaden your understanding. Technical analysis is a key research skill, so take the time to practice reading charts and identifying patterns to inform your trading strategies. You should also be wary of Bitcoin tips from other traders. The nature of the market means many people are waiting to profit from the inexperienced. These same people are all too happy to tell you the right time to buy in the hope of pumping value so they can exit on a big win. Never take advice on face value and do your due diligence. Scalpers are the most active, making multiple trades per day for small profits. Day traders enter and exit the market within 24 hours, taking advantage of short-term market movements. Another technique is swing trading, which is based on in-depth technical analysis to capture trends in the market. Finally, you may want to be a passive trader, holding onto your positions with a focus on long-term profit. 5. Be strict with profit targets and stop-loss orders. As mentioned, Bitcoin is unpredictably volatile, more so than any other financial instrument, so it's vital to have a plan and stick to it. Before opening a position, consider what level of profit you would be happy to take from the trade, what losses you can afford to shoulder, and set your target and stop-loss levels right from the start. 6. Use leverage with extreme caution. Leverage enables you to hold a much higher stake in a trade than the actual capital in your account would otherwise allow. Though this may seem appealing, and can indeed lend itself to significant profit, it can also lead to huge losses if a leveraged trade was to turn against you. Successful use of leverage is a balancing act between risk and reward and takes practice to master. For Bitcoin beginners, leverage is best used with extreme caution and preferably avoided altogether, at least until you have developed your confidence and trading style. 7. Diversify with different cryptocurrencies. The most important Bitcoin trading tips are those that focus on mitigating risk, and diversifying your portfolio is one such tip. Too many first-time traders develop an obsession with Bitcoin's potential and fail to address its downfalls. By trading in other cryptocurrencies, you hedge your investments. If one falls in value, your loss may be offset from profit on another. Diversification can also boost your profits in good market conditions. If you've invested wisely, you could well find yourself holding multiple assets of high value. 8. Buy and hold Bitcoin. As discussed earlier, there are several types of Bitcoin trading strategies. The buy and hold approach is a passive strategy where positions are held anywhere from weeks to years. There are multiple benefits to this. Buying and holding Bitcoin allows you to bypass its short-term volatility. It's not unusual to see significant movement throughout any given day, which can mean your stop loss and take profit targets are easily met, throwing you out of your trade. 9. Get a handle on your emotions. Alongside Bitcoin trading tips involving risk management and strategy, there are also emotional factors that you need to be aware of, most notably, the fear of missing out, FOMO. Due to Bitcoin's extreme volatility, it is not unusual to see dramatic price spikes in a very short space of time, and it can be tempting to buy into an upward trend, fearing you'll miss out on major profit if you don't. However, this goes against the most basic rule of trading: buy low, sell high. 10. Watch out for scammers. With no central exchange and little regulation in place, the Bitcoin market is, unfortunately, an ideal environment for scammers. Fake exchanges and wallets are common, as are phishing scams where fraudulent emails direct you to scam sites identical to the platforms you use to capture sensitive data. Ponzi schemes, which work on a pyramid structure, offer increased returns for investors that recruit other investors and should be avoided at all costs. Malware is, of course, another issue, and without proper security measures around your Bitcoin wallet, you leave yourself open to the threat of having your account emptied. At last, don't forget to subscribe our channel. Thanks for watching our video.